Good morning, everybody. Welcome to MarketStream.live. And this is the overnight action report where we take a look at Asia on June 14th, 2017. My name is Joe Cusick with the Cusick Group Securities offered by MoneyBlock. Let's take a look. Now, we have a very active day today as far as the FOMC here in the United States. We're going to be releasing basically what's been the highly anticipated rate increase, another quarter point. So that means that our overnight rate is going to go to 1% or 100 basis points, as you'll hear it referred to on the news. That basically has most of the market kind of just staying pat. And it was mixed action in Asia in the overnight. And what was interesting, though, was we saw the API data. API data is revolved around crude inventories, crude oil, and there was actually a couple million barrel increase in storage. So there wasn't a draw this week as there was previously on API. So we're going to watch the EIA. That weighed on a little bit on the markets. You can clearly see right now, taking a look at Japan, that the bulls right now in the Nikkei, which finished down 15 points, they're on notice. They've not broken, but they've been challenging that 20-day moving average. And for you new viewers, use these charts. Now, you can use charts wherever you want at your brokerage firm. There's other areas where you can go in and use charts. But what you want to do is put the 20-day moving average, the 50-day moving average, and the 200-day moving average. Why? Even if you're not an everyday market enthusiast, which we hope we get you to be here at MarketStream, it gives you an idea of who is in charge, who is in the lead, who has control of the markets. In the Nikkei right now, those that are long or bullish are in control. It's a very simple way of looking at the market, but that helps you control your emotions. And that's why I point this out every day and during the various segments. And that's why I use this visualization so that when you're watching this and you're thinking, I'm going to start adding some Asian exposure to my portfolio, or I'm going to talk to my advisor and I'm going to ask him, what is our exposure to Japan, China, Hong Kong, India? And the advisor is going to tell you, well, we have somewhere between 5 and 25% exposure based on your risk tolerance, your objectives, and your goals. And so now you're going to look at it and go, okay, I don't feel so bad about having that type of exposure, for example, in Japan, even though I just heard that the Japanese markets were down. Specifically, you saw overnight that the Japanese government came out and said that they're sitting down trying to work with the Chinese, the South Koreans, and get this North Korean situation under control. Now, thankfully, Dennis Rodman is in North Korea right now, so nothing bad could happen, as we had mentioned yesterday. But we did see also some corporate headlines that came across. So we have the geopolitical components there where they're trying to negotiate something so that they can diffuse what's going on in the Korean Peninsula. But what you also saw on the corporate front is Toshiba down 3.4%. Basically, they're delaying their annual report from 2016. This is a very large firm in Japan. There's been a lot of talk over the last 6 to 8 months after they've had some issues with some nuclear investments that went bad here in the United States. They were looking to raise capital, potentially spinning off some of their more profitable units, specifically their chip unit. Now, nothing has come to fruition, but that had that segment of the market down. You also saw in the currency markets, and this is why you all have to start paying attention to the US dollar and then the global currencies. The yen actually weakened. That should have been a positive for the equities. In Japan, it wasn't. One of the reasons why, again, oil continues to weigh on the markets as well. It's been falling down and continues to fall down overnight. We also saw some action in China. The Shanghai Composite finished down. That's despite the fact that we saw some pretty impressive economic data that came out for the month of May. Specifically, you saw retail sales were up at about 10.7%. Now, that was forecasted when we saw the imports-export ratios, where imports were higher than exports about a week ago. We had mentioned this. You also saw that May industrial production numbers came in, and it was actually a point better than expectations at 6.5%. Expectation of 5.5%. These were impressive numbers, but there was an issue. Chairman of one of the largest financial institutions, Anbang Insurance, was seized and is under investigation. Now, there's been a lot of discussion about these large institutions. They become under scrutiny by the Chinese government on the mainland, especially about leverage and so forth. Well, it looks like now we actually see that they're taking some action against some heads of these different institutions. There's about 7 or 8 of them that were notable, that were on the radar, and you obviously see that now we have some action taken. That took a lot of institutional traders by surprise, and China is down a little bit. But what was up was Hong Kong. Hong Kong still looks like the bulls are in control there, even though they're right on that 20-day moving average. Again, in control, but they're being challenged. And you saw REITs, banks, as well as some petro and chemical names that were to the upside in Hong Kong. That was a driver. And then finally, taking a look at India, the Sensex was up just ever so slightly, but again, right on that 20-day moving average. We want to see what are the implications of the United States and our, not only the rate increase, which is about 99% sure that we're going to increase rates by 0.25%. That's not what everyone's waiting for. Everyone's waiting to see how this Federal Reserve is going to unwind the balance sheet. And we'll talk more about that on the What's Hot in the Open at 9:30 Eastern Time. But I think the global markets are going to see what is, or are we going to reveal in the FOMC statements how we're going to unwind this $4.3 trillion worth of bonds and mortgage-backed securities. All right, folks, that's it right now for the Overnight Action Report. Join me at 7:45 Eastern, 7:45 Central, 8:45 Eastern here on MarketStream.live. I'm going to be talking about everything in Europe. See you then.